Hello and welcome to FinextraTV's Thought Leadership Series. I'm Hannah Wallace, and kindly joining us on the call today is Rob Haslingden, Head of Digital Propositions, and Andrea Cox, Strategic Business Development Director for Experian. Hello to the both of you. Thanks for joining us on the call today.
Hi there.
Now, today we're talking about COVID-19's impact on customer affordability, inclusion, and vulnerability. The challenges that organisations are facing around this area and the approach they're taking to address them. It's worth noting that the pandemic has accelerated a number of areas across the industry, including the need to focus on the use of affordability and creditworthiness. So, Andrea, coming to you first then, could you start off by going into a bit more detail here and explain why we're seeing an acceleration?
Well, yeah, so creditworthiness has been like a focus for a lot of lenders for a couple of years now, ever since the FCA published their guidelines and changed their comp rules in 2018. But we've seen much more of a focus, even in the last sort of 12 months, where the FCA have been going to a number of lenders and asking them exactly how they are incorporating those rules into their existing policies and procedures. But what we've seen as a result of COVID-19 and pandemic is actually that there's a lot more focus on affordability. So the reason for that really is to try and understand people's current indebtedness and current affordability, which has changed as a result of the pandemic. Mm-hmm. So there are a number of key areas that have changed, as we're aware. We've had to introduce emergency payment holidays. There's a number of government steps that have been taken to try and, enable the recovery or actually enable the reduction in the impact of COVID on the economy. So, the furlough scheme, for example. And so it's really important. One side of the sort of affordability equation is income. And all of those things have had an impact on individuals' incomes. So it's really important to understand any changes in income that have come about as a result of COVID-19.
Mm-hmm. Okay, so what's been the focus then for organisations at the moment in terms of understanding customers' affordability?
At the moment, there's been a real focus on existing customers. So we've seen generally there's been a bit of a pause in lending or a reduction in lending at the moment, while actual lenders get to understand a little bit more about individuals' personal circumstances and how the pandemic's impacted them. So what we see lenders focusing on really is customer management and their existing customer base. And what we're trying to do is identify vulnerable customers. And the identification of those vulnerable customers can be, things like, have they had an income shock? Has their income decreased or increased? And we have been seeing that there has been some increases in income. And also really understanding their debt profile and their overall indebtedness. And this was a focus that really, happened during the last financial crisis as well in 2008. So we're really looking at how somebody's level of credit commitments, how they're using credit. So are they increasing the number of, are they using credit more? So are they using credit cards more to finance their day-to-day spend, etc. And all of those metrics help identify if someone is vulnerable and they're entering, some more financial difficult times.
All right, that's interesting. And Rob, coming to you then, what's changed in terms of approach? Are there any new KPIs to track or existing measures that have been growing in importance as a result?
Yeah, it's a really interesting question actually, because it's not a question of lenders or organisations having to do additional checks. I think that's the first point. It's about recognising which are the most valuable checks that you need to make, and it's the right point in time, the right place and right frequency in which you make those checks. So some of the key KPIs are some of the points that Andrea has just already touched upon, which is around understanding payment holidays, monitoring these and tracking people's propensity to pay, and understanding when customers can start repaying again, because that's really important in terms of getting the flow of revenue coming in to a lender, which is the fundamental part of their business model, obviously.
Mhm.
Income stability is important. That measure of disposable income, and there's an interesting dynamic here, because I think historically organisations would have lent quite heavily on the ONS averages to measure disposable income, and I think this is the part that we're seeing now playing for open banking. So the new dynamic in the market now is the fact that you can actually, with a customer's consent, get real-time access to their income and expenditure, and you can monitor the recent changes in their income and expenditure using that as a source of data, and that gives you a really granular view of how I'm managing during the crisis. And I think it's been quite interesting to see the way some of the rhetoric has played out in the market between the use of open banking and versus bureau-based data. And what we try to do is to optimize the best of both. So lenders have worked quite collaboratively with the bureau in terms of providing more recent data on things like income shock, indebtedness, and that plays into this understanding of my most recent circumstances and how they might have changed. But where that data doesn't give you the right level of granularity, then we're seeing lenders starting to employ open banking to access that, and that reveals not just information about your income and expenditure, but also your vulnerability as well, because there'll be dynamics and variables within that data that tells you, for example, have you got a long-term commitment to healthcare? Do you have a gambling issue? Are you got alternative sources of income such as benefits and so forth? So it's the balance between the two that we're now seeing deployed, but being deployed in real time to give a recent view of a customer, and then using that to monitor their behaviour over time as the crisis plays out.
Mm-hmm. That's interesting, and you've both highlighted the challenges really well. So what kind of tools are we looking at which would help solve and address these challenges? What do you think, Rob?
So there's an interesting dynamic here, because when we talk about open banking, but if you look at all the big banks, they already have access to transactional data and their own current account customer bases. So we're seeing quite a lot of dialogue at the moment with banks enabling to use automated categorization engines on their existing customer data to do that granular analysis of their transactional data, and then looking to use that in combination with bureau data and the bureau data almost acting as a trigger to then initiate that conversation. So it's not just a question of putting a customer through an open banking journey to get to their consent to share data. That is still useful where you don't have access to bank transaction data. But if you're an existing bank, we're seeing banks deploy what we call categorization as a service, so batch processing of existing current account customer data to inform that analysis of customers. Andrea, what would you say?
New tools that we're introducing. So we are definitely seeing an increased interest in some of our bureau insights tools that we've put out to market. We've gone out to market quite quickly in them, and what really people are interested in is understanding changes in income, because that's the missing part of the jigsaw for a lot of lenders. So they do have transactional information. They can get a view of people's credit commitments through their existing bureau data. But the key that's missing really is income and what changes in income. And so that's why new metrics such as showing income shock over the last 3 months and showing how income's changed, either positively or negatively, because we're also looking here, obviously, in the coming few months of recovery. So where people are, on furlough, they may come off furlough and actually their financial position increases, so their income increases. So it's really important to see the full picture, and so that's really what they're interested in. Also, on a debt side, which again you can get from bureau information, is really truly understanding their income to debt metrics. And I touched on this earlier around credit card utilisation. You can look at things such as whether people are using minimum payments on their credit cards as opposed to before maybe they were payers in full. And all of those are really good indicators of whether or not somebody may be becoming more financially stressed.
Mm-hmm. That's interesting. And is there anything you'd like to finish up with then? Maybe Rob, coming to you. How do we see things developing in the future then?
So I think you are going to see a more widespread deployment of open banking because of the fact that it gives this measure of granularity around a customer's behaviour. I think the challenge that exists around open banking is how do you deploy it on a continual basis to help monitor the changes that may occur in an individual's income and expenditure. And that's where I think bureau data has its parts to play, because it acts as that trigger. There is no consent required to share or to look at bureau information. It's done in the background, and it's relatively low friction in some respects. So lenders can deploy it quite easily to help to monitor changes and be used as triggers. But then if they need to do that deeper dive, then they can call out to a customer, access and get their consent to share their data to do that analysis, to then initiate that intervention. So I think we're going to see a gradual adoption, an increase in adoption of open banking, certainly, but it used in a variety of different ways, and perhaps not openly at the first point in which you engage with a customer, but where you've probably got to do some sort of managed referral and a deeper dive on a customer's behaviour, and a continued deployment of bureau data, but that recent data that Andrea's touched upon that gives that measure of insight and acts as a trigger on behaviour.
Sadly, some interesting developments ahead, and I hope we can come back to this and revisit it and see where we're up to. But for now, thank you so much for joining us on the call. It's been really informative. Thanks.
Thank you.
Thank you.